Welcome.
Thank you.
So, by the way, so today we have a mortgage lender with us on our second episode of Let's Talk Real Estate. We have Ed Francois. He's a mortgage lender with guaranteed rates. Ed, why don't you go ahead and tell the people, man, what you do, where you're from, and how long you've been in the business.
My name is Ed Francois. Thank you for having me, Jason.
Yes.
My NMLS number is 214460. I've been a mortgage loan originator for about 10 years now.
Okay.
VP of lending at guaranteed rate.
Okay.
So I've been doing this for a very long time. So I see, I've been through some stuff. So I've seen a lot of stuff.
Yeah.
Nice.
Industry. Nice. So yeah, man. So again, I wanted to bring you on because again, there's a lot that's going on with the real estate market. You know what I mean? And I definitely want to be able to, I'm sure there's a lot of questions, and we want to get some of those questions answered today.
Definitely.
So what are you seeing right now with the real estate market? What's your what's your thoughts on the real estate market from a mortgage lender perspective?
From a mortgage lender's perspective, right? The market is kind of like a lot of turbulence. Rates are going up. A lot of first-time home buyers, they're pricing a lot of first-time home buyers out, right? Because the rates are going up. A lot of people that used to qualify for this amount now, they don't qualify for that amount anymore.
Okay.
But as far as the market, it's a great market. There's a lot of opportunities out there.
Okay.
So if you really think about it, when the rates go up, technically prices do come down a little bit.
That is true.
So let's say there's a lot of people that's on the fence right now, thinking, well, you know what, I shouldn't get into the market. The market doesn't look stable, or whatever the case may be. The only issue with the market right now is not enough inventory.
Right.
So if we had a lot more inventory, market would be smooth sailing.
Smooth sailing.
Even though the rates are a little bit higher than before, but there's still a lot of opportunities out there.
Yeah.
So
are you still seeing a lot of people buying? Is that happening? Or because I know you're saying that well, we don't have enough inventory.
Correct.
Right. So in other words, if we had enough inventory, would there be more people buying houses today?
Yes. People, keep in mind, people are still buying.
Okay.
It's just less buyers now. So sellers are being more reasonable. So before you just put your house on the market, you're selling for $500,000. Somebody offered you $525 because they're tired. They've been looking for 6 months.
Yeah.
So you know what? I go above asking. It's $525.
Right,
it's $550. It's $540. It's like now it's a little bit different. So most of those buyers are getting priced out. So now it's like, okay, you get a good deal.
I see what you're saying. So here's my next question to you. Where do you see interest rates now? What is current interest rates today? I know that's a huge question. Everybody, what are interest rates? Obviously, you can go online and look that up yourself. But we have a lender in Ed here today, and he's doing mortgage every day, and so he can tell us, what's going on with interest rates and things like that. So, what is interest rates now, and what's going on with interest rates? Your thoughts?
Interest rates are in the sevens right now.
Yeah.
Right.
Man.
Yeah. I mean,
man.
2 years ago we was down in the threes. Now, now we're up in the sevens. But what I usually tell a lot of first-time home buyers is that interest rates are a little bit high right now. As long as you can afford the payment, because you always could refinance later.
That's true. Married the house?
Yeah, marry the house, date the rate. Absolutely.
That's what they say. Right.
Marry the house, date the rate, But as far as where I see rates going, if inflation keeps going up, the Fed is going to raise the rates. That's basically just the gist of it. If the inflation keeps getting out of control, the Feds have no choice.
They have no choice to raise it, right?
They have to raise it.
Now, do you know what's the reason behind them raising the rates?
Too much money printing.
Too much money.
Too much printing money. Too much.
To like control what's going on, right? To slow down.
Absolutely.
Slow things down a bit. Wow. So in other words, we have way too much cash in the market, man. People have way too much cash, right?
I mean, they're pumping a lot of fake money out there. That's just what it is.
Okay, so that's fake money. That's true.
Fake
that's
money.
True.
A lot of fake money. So, but do I think the rates are gonna go down? Yes.
Okay.
Do I think maybe probably later in the year?
This year?
Hopefully that's what it's looking towards too.
Okay.
But like I said, if inflation is not cooperating, then rates are gonna stay. It's gonna keep going.
So how do we here? And it's a tricky thing, man, because inflation, right? How do we? Not us, but like the government. How do they take control of inflation? Like, how do we stop that from continuing to go crazy? Because I know right now inflation is what, like maybe like 6 to 7%, going to like 8 possibly.
Correct. Usually.
And we need to be at what, 2?
Yeah.
Just about.
Yeah, 2, 3.
2, 3, right?
Yeah, that's normal.
That's normal.
Now
right.
we're a lot higher. They're telling us it's 6.5. It's probably a lot higher. Who knows?
Wow.
But to prevent inflation, the money printing.
The money printing.
Money printing meaning stop, giving money out and all that stuff. So.
I see.
But people got to keep in mind, when you was a little kid, you gave you $1, you go to the store, you could buy a lot of things.
That is true.
You give a little kid $1 today, may come back with 1 or 2 things, if that.
If anything.
Yeah, right. If anything. So prices do go up, But the thing is, inflation is just at a rapid pace.
Man, and it's scary, It's scary because, like you said, if you have $1, right? Just think about it. If you had $1 today, and you go to the store, as again, when I was in high school, I could get a couple of things with $1. Man.
Exactly.
I could have gotten a couple of things with $1. You know what I mean? 50-cent honey buns or whatever the case. No, literally, like whatever the case may be, I could have literally gotten a couple of things with $1. But today, I don't know what the kids are getting these days with $1, man. It's insane.
I don't know.
Not even if you get sick and you wanted to buy a Halls candy, you can't even do that with $1. You're paying $1.25, $1.50, depending, right? So, as an average consumer, right? And I'm sure it's a problem, right? And I'm always about solution.
Absolutely,
right?
solution.
So what is it that the average consumer can do to put themselves in a position to keep up with what's going on with inflation? What's your thoughts on that? Like, what can they do?
Invest. Invest. That's the only thing you can do. If you invest, cut back on expenses, or make more money, right? So the best thing to do is invest. Invest your money, right? And the best thing you can do is you got to buy assets. So when inflation goes up, assets goes up as well. So
right.
assets. So like
nice.
Even like rates are going up. It's not just in a real estate market. I have a good friend of mine. He owns like a dealership.
Car dealership.
Car dealership.
Okay.
They're getting killed. They're getting crushed. Makes no sense.
Wow.
Makes no sense.
The funny thing about that, man, I was listening to this podcast this morning, and the guy was saying car payments are up. I don't know if it's luxury cars or whatever the case, maybe like $200 something, man.
Yeah.
A month.
Yeah.
Like car payments.
Because you gotta think about it when the Feds raise the rates, it's not just real estate rates.
Right.
Do you see what I'm saying to you?
Yeah.
There's other industries as well.
Cost of living, everything. Egg prices are through the roof right now.
Correct.
Right.
Even builders.
Right.
We used to buy lumber.
Through the roof right now.
Through the roof
right now. So you're saying the best thing for the average person to do is to invest.
Correct.
Invest in what? Because if you're investing, I'm assuming you're investing in an asset.
Correct.
Right? Like, what are some assets that we can invest in, to edge against inflation?
That's a good one. I won't say
Yeah.
I can't. It's not. I want to say going to the stock market, even though the stocks are kind of down right now.
Yeah.
But you still have to invest.
Yeah. Just invest. Just invest.
Yeah.
Just invest. Just invest.
You know, but keep the stocks are down.
Yeah.
What are you gonna do? Not invest?
You gotta dig in, man.
You see what I'm saying?
If it's me, I'm diving in.
Listen, when you're an investor, you don't want to buy when it's high.
Right. Exactly.
Right. So how do you say buy the dip?
Exactly.
So,
exactly.
I mean, you still gotta invest. But I personally, I'll say I'm a real estate guy, right?
Mm-hmm.
I personally say buy real estate.
Mm.
You know, most millionaires in the United States come from real estate. You know, so.
That's good stuff, man. That's good stuff. So you want to edge against inflation. You definitely want to invest in some assets. I believe gold is a good one as well.
Gold is a great one.
Gold is a great one, right? Stock is a good one.
Some people might say Bitcoin.
Bitcoin, right?
You know? So.
Good stuff. Good stuff. Good stuff. Now, let's talk about like the different loan products, because obviously we are here to talk real estate, and we definitely want to stay real estate focused. We could talk about a whole bunch of assets, but we're here to talk about real estate. So, what are some of like the different loan products that you offer, and that also that you're seeing that's working the most right now?
We offer a variety of products.
Okay.
Right. For first-time homebuyers, let's use them as an example because I work with a lot of first-time homebuyers and investors, right?
Okay.
So first-time homebuyers, we have an FHA program. You
Okay.
put 3.5% down, right? Oh, newsflash. For the first-time homebuyers, FHA just reduced the mortgage insurance premium. So before it was 0.85%. Now it's being reduced to 0.55%. So 30 basis points reduction.
Let's talk about that.
So for example,
2
years ago, so let's just say if you were buying a house, right, your interest rate could be, I don't know, let's just say 6.5%, 7%, right? If you decided to go 3.5% or whatever for FHA program. Let's just say if your monthly payment before the change, I think the change go into effect at the end of March, if I'm not mistaken. I don't have the March 24th or something like that, right? So now, by this reduction, even though your rate may be a little bit higher, by FHA doing this reduction, you just reduce your monthly payment by, based on a $300,000 house, by $100.
So in other words, if you buy a $300,000 house, if your payment was, let's say, $2,000, it's now $1,900.
Exactly, it's now $1,900 now.
$1,900 because of
the mortgage premium reduction. It went from 0.85% down to 0.55%.
So that's a big one.
That's a big deal.
That's a big one.
Especially, let's just say if you're buying a house for $500,000.
Okay.
You know, that's you're saving at least an extra $100.
At least $100.
At least minimum.
At least $100, right? That's good.
The higher the prices, the more you save.
You want to dive into that a little bit more so that the average person can, really get that information, because this recently happened. When did this happen?
Not even 2 weeks ago.
Not even 2 weeks ago.
So this is just fresh, brand new.
New.
It should go into effect, I believe, at the end of March.
Gotcha.
So
it's not in effect yet. So this is
it's written. We're just counting the days now. So it's passed through and everything. So it's counting the days now. That's all.
So I really like that, because I totally believe that we talked about renting and owning, right?
Correct.
And couple, let's say, years ago, right? We talked about this earlier. A renter, may look and say, what, owning might be $200, $300 more expensive, right? Just depending, right? Case by case. But now with this program, the payments for owning is going to be at least $100 less.
Yes, it's $100 less.
Yeah.
Based on the reduction in the mortgage MIP.
That's super dope.
Correct.
That's super dope. All right. Is there anything that you want them to know about that program specifically?
It's It's an FHA program.
Okay.
Anybody offer it as long as you have a minimum credit score of I don't know. FHA goes down to 580 or something like that. Most lenders go down to 580, 600 FICO score, whatever the case may be. You're able to get that program. But that's just one of the programs for first-time home buyers or for any other buyer out there. The only requirements that they require that you live in the property.
That's it.
Right? That counts for 1 to 4 units.
Okay, so 1 to 4 units, you just have to live in the property.
Absolutely.
And it's mainly an FHA product.
Yeah, that's an FHA product.
Get that.
So now, another program that we offer, like conventional loan. So a conventional loan is basically, it's not an FHA product. So you could either put 3% down or 5% down. Now they have a home ready and a home possible. All these programs that I'm naming is basically, it's income driven, medium income in that area that you're looking. So for example, let's say if you're purchasing a property in, I don't know, let's just say New York or whatever the case may be, in Queens, New York. So the medium income for that area, which we have the address, let's just say if it's 80,000. If it's for 80,000, you could qualify for that program.
Right.
So that's another program that we offer. Another program that we offer.
So let me, not to cut you, Ed. So you said there's a 3% conventional loan product.
Yes.
It's a 3% conventional loan product.
Correct.
Which means you could put down less than you would put down in a first-time home buyer's product.
Correct.
Can you explain that a little bit?
So, for example, the FHA program, they require you to put 3.5% down. That could be your own funds or gifted funds. So, for example, even if you don't have the funds, or if you're a professional, you could tap into your 401k, or if you don't have that, you could have your parents, siblings gift you the money. Do you see what I'm saying to you?
Yeah.
That could be done. So with the conventional program, it's basically it's less than that. It's 3%. So if you're buying a house for $200,000, all you need is $6,000.
But you can't get that as a gift fund.
You could get that gift funds as well.
You can have a family member give you that down payment
Absolutely.
money?
Down payment could be gifted as well.
Yeah? For the conventional?
Conventional as well, correct.
Wow. That's interesting. That's a good one, man. Because a lot of times, Jason, what's the minimum down payment that you can pay? So I think that answers that question.
Yeah.
So the minimum down payment, as you know, guys, is 3%.
Correct.
That's the lowest that you can pay on a
conventional
loan. Now, what's the difference between a conventional and an FHA, would you say?
It depends on, for example, it depends on, here's the basic. It depends on the credit score, right?
Okay, good.
So for here's the difference. FHA, for you to get into an FHA program, FHA charges a 1.75% upfront fee, right? That's automatically financed into the loan, right? But now, due to the recent changes, FHA just reduced their mortgage insurance premium.
Yes.
So now it's more competitive with the
conventional.
Now, conventional loan, you could put 3% down, and you could put 5% down. Now, as far as your mortgage insurance, it depends on, how much you're going to pay depends on your credit score. Do you see what I'm saying?
Okay, I see what you're saying.
So, for example, let's say if you have excellent credit, then you're probably going to pay minimum compared to FHA. But let's say if your credit is not excellent. So, what I mean excellent is, so basically anything above 740 is considered tier 1, right? Above 740 tier 1, 739 to 7, let's just say 720, that's tier 2, 719 to 700, that's tier 3, and so on and so on and so on. So if your credit score, let's just say if you have credit challenges, your credit score is not where it needs to be, you still could do a conventional loan, but you just have to make sure the difference. Like with the lender's going to let you know, hey, this is how much your payment's going to be with the FHA, so you can compare. This is how much your payment's going to be, mortgage insurance, and everything with conventional. So for a lot of buyers out there, the reason why you pay mortgage insurance, if you don't put 20% down when you purchase a property, the bank say you have to pay mortgage insurance. So for example, originally if you put 20% down, you finance at 80%. Now, not too many people have 20% down. So if you put 5% down, mind you, there's 15% left that for you to basically conclude at 20%, but because you don't have that 15% of mortgage, the bank is gonna be like, okay, you're gonna pay mortgage insurance.
Got it.
You know.
Got it.
And also another difference with FHA is, depending how much you put down with FHA with the mortgage insurance. If you put 3.5%, the mortgage insurance for the life of the loan, right? With conventional, once you have the equity position, I believe, once you have 20% equity position, mortgage insurance comes off.
So after 20%, you have no mortgage insurance.
Exactly.
Okay. So, and it's funny, and here's another question too. And I'm happy you said all this, because a lot of times, the individual will say, man, I need to have 20% to purchase a home. And I want you to answer this question.
You don't.
Yeah, there you go. So, a lot of times, man, I don't have enough money, to buy a home. I'm still working on getting my funds together, and I see it as a huge barrier.
Correct.
Towards creating generational wealth. And at an early age, that was taught to me, man. Like, we have to have 20% down to purchase a home. And I see how that jams up a lot of us. Correct. So I want you to speak on that a little bit. And, again, I guess we just said it. He just said it. The minimum down payment to purchase a home is 3% conventional, right? You have an FHA program, which is geared towards first-time home buyers, and you put down 3.5%.
Correct.
Right? So I just want to clear the air. We don't need to have 20% to purchase a home. Talk to me about like grants, concessions, and what are some opportunities that you've seen out there for a first-time home buyer?
There's a lot of opportunities for first-time home buyers. So each town, each county, each state is different when it comes to grants. So like for example, New Jersey, we have a $15,000 grant program, right? It's a state program.
Nothing for New York, man.
New York, they do have. I believe they have Son of May for New York. I think if I'm not mistaken, it's like 3% or something like that. So, but some of these towns, they have other grants. You just have to inquire. Like, it's basically a phone call.
Yes.
Just call down, hey, do you guys have any, real estate grants and stuff like that? Because what happens is they don't usually advertise they have grants. You usually know when the money runs out.
Yes.
We had this grant. So you just got to be proactive, internet, get online, pick up the phone, and just call. And you can call somebody like Jason. Hey, Jason, I'm looking to purchase 100%. Somewhere X, Y, and Z. And then, Jason or you or the buyer could basically just get on the phone with that town and ask them what kind of local grants that you guys have available.
100%.
So, and another excellent opportunities. There's a lot of people, I've been getting this question a lot.
Yeah.
A lot of people saying, you know what, prices are too high. I can't afford it. Affordable housing or anything like that. This is what I say to a lot of people. Remember, you're buying a house, right? It's your first home. It doesn't have to be the perfect house. Right?
I believe.
What I suggest to a lot of people, if you feel like you don't want to overpay or you don't have the money to overpay or whatever for the house that you're looking to purchase, buy a distressed property. Buy something that needs work where you could get it at the bottom number and then you could use a first-time home buyer program like a FHA, 2 or 3K.
2 or 3.
It's a renovation loan and you could customize the home the way you want it. Do you see what I'm saying to you?
Yes.
So let's say if you're in a neighborhood, houses are going for 500,000, 400,000. You see a beat up house. It's a distress.
That's an opportunity.
Exactly.
That's an opportunity.
Exactly.
Right there, that's an opportunity.
Exactly.
Hey Jason, man, I see this property over here on Main Street. I love the location.
Exactly.
How is there a loan product that we can use to purchase this home? My guy got it.
Exactly. You can use 2 or 3K FHA.
Yeah.
Got a good contractor. Let them know how much the work is going to be. Finance everything into the loan. So when you move into the house, it'll be a whole brand new house. And the great thing about it, you could customize it the way you want it. You know?
It's funny enough, man. A buddy of mine, he just did that in New Jersey.
Mm-hmm.
He just bought, I want to tell you, it's a 3-family house. Very nice house. And he's in the process now of putting tenants in there, man.
There you go.
You know what I mean? Like, he went through that process, and I'm sure he has a lot of experience from going through that. But
absolutely.
You know, I'm sure he also say it's worth it.
It is worth it
because now he has a whole bunch of equity built in.
Exactly.
You know, he's definitely cash flowing now monthly, and yeah, it's a great product, man. It's a great product. It's work. Don't get me wrong, because but you know, if you're going to do something like that, right, it may take some time to get it done. Maybe like 6 months to a year. It all depends.
Correct.
But it's worth it.
It is. It's extremely worth it,
especially for a first-time home buyer. You know, and you know, you're worried about, you know, what's going on right now with the market. That's an opportunity. Correct. I would say, for that person.
Absolutely.
You know, something to consider.
Absolutely. And keep in mind, you're buying a house at the bottom price.
At the best price you
could probably get it at, right?
Yep.
You're fixing it, you customize it the way you want it. Then you can move in. If you get a multi-unit,
you can rent it out.
You could rent it out, right?
Opportunity to live rent-free.
So there's a lot of things you could do. There's a lot of opportunities out there. You just, you know, as a lender, what I tell my first-time home buyers, be prepared.